I think we can start now. Is my screen visible to all?
Yes.
Yes, sir.
Yes.
Okay, great. So, thank you all for joining today. And before we start, a standard disclaimer that any stock that we will be discussing or anybody will be discussing here should not be considered as an investment advice. Right. So the topic for today is trading pullbacks. Um, we have discussed breakouts, we have discussed momentum strategies. Uh, Today we'll be discussing pullbacks, deep pullbacks, deeper than the momentum trading setups that we uh, discussed last time. And so, trading pullbacks is one of the most effective strategies for entering uptrends, right? We all know that. Uh, Rather than chasing breakouts at the peak prices, pullbacks allows us to capitalize on temporary price corrections. We enter in an established uptrend, wait for a temporary dip when the stock price is rising. Breakouts are generally overrated while pullbacks are underrated. We normally talk of breakouts. We are buying breakout this, we are buying a breakout from cheat level, low cheat level, or swing high breakout. But pullbacks are generally not much spoken of. Pullbacks are underrated. In fact, Kalamagi, he says that pullbacks in an uptrending market are a gift. The momentum trades that he buys, they are all pullbacks to 10 EMAs. So let's start with understanding the pullbacks. We have a strong uptrend. Stock is in a clear uptrend. Stock takes a breather. No stock will go up in a straight line. The price will briefly move in the opposite direction to the main trend also. And then we identify these pullbacks here and then enter in the direction of the trend, right? So in this presentation, we will be discussing only long trends, going long. We will not be discussing shorts. So we look for setups that are trending up, stocks that are trending up. We will wait for a pullback or a temporary dip in those rising stock prices, and then we wait for the signal to go to enter the trade and trade that stock in the direction of the uptrend. Yeah. So in short, that is a pullback entry. We have a strong uptrend. We wait for a short-term decline or a pause. The trend resumes and we enter over here so that we ride this leg of the next up move. So a pullback refers to a short-term pause or a decline in price during an established uptrend. The established uptrend is defined using this, the first move that the stock takes. And these short-term declines or pause, they happen due to profit taking, market corrections, temporary shifts in sentiments, but the underlying trend remains intact, which is going up. Okay, before we continue, one thing. If you have any query or question, instead of writing in the chat box, just stop me and ask me here itself. Right? You can feel free to interrupt me, stop me, so that you can ask your question. Right? Okay. Uh, Breakouts versus pullbacks. This is very easy to understand. This is a base. This is a breakout. You know, it could be a low cheat. Doesn't appear to be low cheat because there is a uptrend here. Uh, it's a swing high breakout. We enter over here on the breakout. The difference here is that the difference between a breakout and pullback is in a pullback we'll bang a little slightly higher, right? Now this is a pullback to one of the EMAs. For breakouts, the price breaks through the established resistance level. This is the resistance level, the red dashed line that I have drawn. The breakout happens with some increased volume. The stock goes up, then pullbacks on lower volume, right? And then we take our entry when the price starts to move up again. So this is the basic difference between breakouts and pullbacks. Now, why this is important is because when we are trading, we should understand, we should know what we are trading, whether we are trading breakouts or we are trading pullbacks, right? Many traders, when they consider a stock or they buy a stock, they do not even know, especially the traders who are starting up, the novice traders, they do not understand whether they are buying breakouts or they are buying pullbacks. So it's important to know whether we are, to distinguish between the two, to classify before we are buying it. Pullbacks will occur within a trend. Pullback can appear here also. It can further appear here also when the stock goes back to touch its 10 or 20 EMA, right? Or any other method that one can follow for finding pullbacks. Breakouts, we try to capture the new momentum for either a new trend when the stock is coming out of stage 1 and entering stage 2, or within a stage 2 if it makes a good base and then continues again. In pullback, the stock retraces back to one of the EMAs, it takes a temporary dip. Can you all see the poll? Do you all get it?
Yeah.
Yes.
Wait, let's see. And can you all see the result also on the screen?
Not yet.
Okay.
No.
Okay, I can see it. Around 58% are buying breakouts, 40% are buying pullbacks. Let's see.
Yeah.
Oh.
So one question: all these undercuts, 20 and 50A, are actually nothing but pullbacks, right?
Yes. We have a slide for undercuts also, so we will come to it later.
Okay.
So Puneet, I have a query over here.
Yeah, please, Rajat.
So this might be a daily chart, right? I'm just
Yes.
assuming it to be a daily chart.
Yes,
So
all
now
the
what
charts that we
happens
will be
is,
discussing will be on daily time frame.
yeah. So now what is happening? This is a daily chart, but maybe on a if on a 15-minute chart, this breakout might have been might have retested a 15-minute EMA at some time. So whether that pullback would also be considered, that happened on a 15. See, we analyze a chart on a daily basis. Then
Yes.
obviously for entering into a position for intraday, I'm specifically talking about intraday. You make certain changes to the time frame. You see it in a one
True.
minute, 3 minute, 15 minute, and in
True.
15 minute, let's suppose this breakout happened in a 15-minute period, and then
Okay.
we see that once we go to a shorter time frame, let's see after 15 to a 5, then we see that it has already retested this breakout, which would, whether that retest would count as a pullback.
No, that should be considered as a breakout according to me, right?
Okay.
Because the ultimate candle by the end of the day will be something like this only unless it is, not a breakout and the stock pullbacks and it makes a wicks on the top of the candle. Or let's say if here it would have made a wick and come back to the breakout level over here, it would have been a DCR less than 50%.
Yes.
Right.
Yeah.
It would not have been a breakout. So consider the candle to be a breakout when it is actually breaking out the daily time frame. Your entries can be on a lever time frame, and I also follow that. I do not go as low as 15 minutes or 5 minutes. I prefer not going below 75 minutes. Right. So a 75-minute candle, one can see. I mean, if you prefer using 15 minutes, that is up to you. Right. But a breakout should be considered only on daily time frame.
Okay. And now considering this candle which you have mentioned as a breakout, so after 5 candles where it consolidates right after the breakout,
Yes.
so don't you think this would give us a entry here only? Means
Yes, that is also a pullback. That is also a pullback. I just made it here, but that is also a pullback. See, pullbacks can be to 10 EMA, 20 EMA, standard pullbacks, right? And 50 EMA. Pullbacks when the stock is breaking out first time, right? We should actually look to see pullbacks coming to, shorter EMAs like 10 or maybe even 5 EMA, right? But when the trend is already established and next time when it comes down to 10 EMA or 20 EMA, in my opinion, 20 EMA will work better. 10 EMA will be very fast. It's mostly used for hot and active stocks,
Hmm.
right? But the first time when the pullback is coming to test the breakout, it can come to 5 EMA or maximum 10 EMA.
Okay.
Right.
Thanks.
Even if it would have come to same test the same breakout level, the EMA would have been only 10 here, right at max.
So right now, what EMS you are using on this chart? These are 20 and 50.
This is 20 and 50. Yes. I'm assuming this is 20 and 50. I don't remember it exactly because when I pasted the chart, but I think it was 20 EMA.
Okay.
But we will be discussing pullbacks to 10 EMA, 20 EMA, as well as 50 EMAs in this presentation.
Okay.
So Punit, Shashi
Yes.
here. Just a comment, not a question. So
Mhm.
say what I do usually is like I try to take
initiate position at breakout, and then every pullback I try to add the tranche because I always look for long term. You know? So that's better strategy, right? At every pullback I can add tranche to maximize, that particular move upwards. So I try to ensure stock is in momentum, and then every
Right.
pullback I just add tranche till my full allocation for that stock is reached.
Right. So pullbacks are actually opportunities to enter into strong stocks, right? If we miss a breakout, or if we want to be sure that the breakout is actually real, right? Then pullbacks give us those opportunities to enter these stocks to not miss the opportunities. So pullbacks are definitely helpful. In fact, Jesse Stein, the super trader, he himself says that he buys pullbacks on weekly EMAs. So pullbacks are those opportunities, like you rightly said, buying a partial position on breakout and then wait for it to see whether it is an actual breakout or just a fake out, and then buy, add more on pullbacks. Right. So pullbacks can be identified
Excuse me,
using.
Puneet. Can I say something? Sumit here.
Yes, sir. Please.
So, what should be the volume level at the initial pullback, first breakout? Can you
So
explain about that?
yeah, so pullbacks on, the volume on pullbacks will always be lower than the breakouts if you're comparing the two, right? Or even during, if the pullbacks comes over here, a good shallow pullback will always be on a lower volume compared to the previous period when the stock is rising, right? If you check the 5 days or 10 days average of the pullback, that volume will be lower. So if you draw the average volume line, the volume on the pullbacks will be lower than the average that you are using, right? I'm assuming you are using 21 or 50-day average volume line.
Okay,
The
so
volume, yeah.
should we wait till the pullback of that 10 MA or 20 MA, depending on the
Yeah, we will
situation?
come to that. We will come to that. We have a separate cycle.
Hello, Puneetji. Sudhanshu here. I don't know
Yes,
if we are in the middle of the questions or we are just starting.
No,
But
sir.
since everybody's asking
Please ask me. I just said that, any question that you may have, please stop me and ask here itself if the question is relevant to the slide. Right?
okay. How do you differentiate between a pullback and trend reversal? So sometimes these pullbacks are low volume, but at times it can go back and then it becomes a trend reversal. So how do you differentiate that?
So pullbacks, um, reversals actually look like pullbacks only. If a stock comes over here and then until it actually reverses, we do not know whether it will be a reversal or it is just a pullback, right? But if the volume activity on a pullback is pretty high, if there is high selling volume, you can at least, say that this might be a reversal, right? But reversals will always look like pullbacks, but reversal will ultimately be a permanent change in the trend. Right. And if the stock is pretty extended, starts with a volume, it opens up here but closes below, and the next candle is also going down, you can say that it might be a reversal. But I think that a reversal, in a volatile market like we have currently, we do not know whether the stock has actually reversed or it's a pullback. Market conditions might get better tomorrow and the stock goes up again. So in a volatile market, it's difficult to differentiate, whether it is actually a reversal until it has happened. That's what I believe.
So, Puneet, Bhaskar here. Can I add more to what you
Please.
just mentioned?
Yes, sir.
Yeah. So, the way how I look at a pullback versus a reversal is that when the stock is pulling back to the moving average, you don't know if it is a reversal or a pullback only. You just look at the volume pattern, whether the volume is drying up and how is the bar constructing during the pullback, right? The first pullback after the breakout, right? The bars are all narrowing down and there are a lot of lower wicks, meaning there is a buying support coming in there. So that's one sign that we can look at it. Typically, what I do is I prefer the bar to either undercut or even attempt to go below the moving average, but then it recovers from there. that shows there is a buying coming in around the moving average. But the actual entry will be on the following green bar, or in this case, the blue bar, right? Where it goes above the high of the previous bar. And ideally speaking, that previous bar, which is undercutting the moving average, should be a narrow range bar in a very ideal state. If it is not, then that's a different issue. What this gives us a biggest advantage is that like your risk is very low. You are entering with a very small risk. So if you are somebody who trades with a larger position also, because the pullback is very close to the moving average and you are entering there, it naturally helps you to place your trade for a larger position with a smaller risk. And let's say, for example, it turns out as a blue bar, it goes above the previous day's high, you enter there. And then during the close of the day, it reverses and goes below that. Your stop loss is almost immediately hit. So you are out. So we don't have to speculate whether it is a pullback or a trend reversal when it starts to pull back. Rather, we should wait for it to show the signs of the positive move where the trend resumes in the direction of the primary trend. So that probably is the best approach to look for confirmation of the whether it is a pullback or a reversal. I hope it's making sense.
Right, sir. So you are saying that until it falls back from reliable EMA like 50, you are saying that we cannot know whether the reversal was actually a reversal or it was just a pullback. Because it might come back here by the time 50 EMA catches up, it can again pull back from there and resumes its uptrend. So at the top of the candle, we cannot
It can be
actually.
a price correction where it. Sorry.
No,
Yeah,
please
go
go
on,
ahead, sir.
go on, go on. No, what I'm saying is a pullback when it is having a pause in the momentum for the EMAs to catch up. It can be a price correction where the price retraces back to the EMA, or it can be a time correction where it just squats
Right.
and waits for the EMA to catch up. So either way, the EMA catching up is a good indicator for us to hold it.
Yeah.
Like for example, Punitji, if you take a recent example of KIOCL, so it gave a breakout, but after that, it was kind of stock reversed to, as Bhaskar sir is telling, so it goes, I think, 50 MA. Then again, it has given, I think, on Friday, it has given again breakout.
Yes.
So we can see that what Bhaskar sir is trying to tell, we should wait to avoid, risk. Otherwise, if we could have taken on breakout, so there is every chance, our stop loss get hit, and and if we are on a larger position, so we'll make a much larger loss. So if I understood correctly.
Right.
Yeah,
So
sir.
does that answer your question?
Yeah, one question for Bhaskar.
Actually, what I have seen is a lot of pullbacks or reversal happen with very low volume. So I don't know whether volume characteristic is something that we can rely on. And then second thing I have seen is even though it pulls back at 50 EMA, right, or it bounces back from there and it whipsaws, right. So we have that 50 EMA something, right, which it would come back, it would break, and it would again go up, and then it would again come back and break, and at means after doing it couple of times, it may actually break that thing. But yeah, means if we do risk management with small positions and all that, that can be done, but it is very difficult to really distinguish between the pullback and reversal. That's the.
So the price when it is dancing around a key EMA and going up and down, that is a situation which we can avoid also, right? Instead of entering every time when it goes up the 50 EMA and goes down 50 EMA, we exit. We can probably avoid the situation when that stock is moving, dancing around, and it's in a zigzag position.
Yeah, but that always happens in hindsight, right? So first time it has come down to 50 EMA, it has broken, and then it is bouncing. So you think probably it has now taken support at 50 EMA and going up. So you enter, then it again comes back. So at the whipsawing thing can.
So, Sudhanshu, my response to that is, right, if a stock, so we essentially are looking to trade the momentum, right? So the higher the momentum, the shorter the period of the moving average, the price should ideally respect. So if the momentum is very strong, it will respect the 10 EMA. If it is even stronger, it will respect the 5 EMA. If the momentum is slightly weaker, it will respect the 21 EMA. Ideally speaking, if I were to trade a pullback, I would only look for stocks which has the propensity to respect the 10 EMA or the 21 EMA. Because if it is going to come back to the 21 EMA and then bounces, it's going to probably take a much longer time for it to give a breakout, fresh all-time high or a fresh high, as against a stock which is pulling back to the 10 EMA, right? So if a stock is very volatile, the nature of the stock is very volatile and it is coming back to the 50 DMA, which I don't want that as a pullback trade at all. I would rather wait for that 50 DMA bounce to calm down, right? The momentum slow down, and then look to have a larger range breakout and then play it at the pullback to 10 or 20 EMA. I wouldn't look to trade the pull back to the 50 DMA the very first time after the stock has given a breakout. I expect the momentum to be strong so that it holds around the 10 EMA or the 21 EMA and then goes higher.
Yes, so the first time the stock is breaking out, it's the stock should actually hold up its 10 or 20 EMA instead of coming back to 50 EMA directly, because then even in this example, if we see if the stock goes up and comes back to 50 EMA, it will be retesting its breakout level if it comes in after a long time. But a good momentum stock will actually be holding up its 10 and 20 EMA, like sir said.
So, Puneet, ideally, we should also consider the market condition as to what Nifty
yes.
or the entire market is doing. If Nifty or say the market is in a uptrend, then it is more probable that the breakouts would sustain and the pullbacks would be shallow. And that coupled out with the volumes, see if there is a very less volume and it is pulling back even to 21 EMA, so then it is something which you can adjust to. However, taking a breakout trade with a 50 EMA as a stop loss, or means adding on to position once you have entered into a breakout and then waited for a 50 EMA, I think the stop loss would be way too large.
Right. But just to add on this here, a good base level breakout will happen near 50 EMA only. The stock price will not be very far away from 50 EMA also. When the breakout is, when a good base, a longer base breakout is happening.
Can I add something?
Yes, please.
Uh, Most of the time, when I made a huge amount of money, that was the period when the CNX 500 or small cap is just started to move up from the correction. And at that point of time, if you take the pullback trade, it will give you the highest amount of money. So right now, we were into the 1 month good stretch. It came back, and if again it start moving from here, if you take all the pullback trades from here, it should give the good amount of money. But if the small cap index or CNX 500, they are not performing and you are taking a pullback, most of the time you'll have a drawdown. That's what I feel, and that's what my journal says. I keep the all the trade in the journal. So generally I have seen that whenever the CNX 500 or small cap index, if you follow that, and if they are started moving up, every pullback trade will give you a huge amount of money with a minimal stop losses.
Correct. Right. So market conditions have to be supporting our trades. I mean, in fact, this will be true for all the breakouts also. For any kind of strategy to work, the market conditions should be conducive. Right. Rudraji, you want to ask?
Yeah, Puneet, I just missed first 5-7 minutes of the conversation. I'm not sure whether it has already been discussed. Let's say, are you able to see my mouse pointer here?
No.
Okay. Can I draw something?
Yes, sir, please.
Okay. So just wanted to understand, let's say for this particular slide, where the breakout is happening, that breakout candle, post that breakout candle, there is some kind of consolidation which is coming back to the, I think, whatever the EMA it is. So, post that, if I want to take an entry, what may be the best point where I should take an entry? Should I take an entry over here, or I should wait for a day's candle to be closed? What may be the best strategy?
So I believe this fourth black bar that you're looking at is an inside bar, most probably. And I personally use 75 minutes chart to take my trades. After I identify a stock based on daily time frame, and if that 75-minute swing high is breaking out, that is where when I take entries. But there can be different methods also to take those entries. On a smaller time frame, I know people who are doing it successfully using a simple 921 EMA crossovers also, right? Or using AVWAP also, like
Right.
right. So there are different ways to make entries. A simple breakout of a mini coil when this is happening. This is also this is a mini coil also, if you see, right? So right. So a breakout of the mini coil or the break of inside, so there can be different ways how you want how you can time those entries.
Because why I have asked this question, because many a time I found that there's a squeeze and then the breakout is happening and which is successful also. But if I wait for the day's candle to be closed, my stop loss is becoming way high. That may be out of my criteria and I missed the trade.
Yeah, so that can happen. You cannot, wait for entry or for the price to, close here or even higher, right? You have to look at smaller time frame charts or define an entry before before the candle, like the daily candle actually, finalizes.
Even if sometime I take entry in that way, avoiding the day's closure, there is always a trade-off possibility, right? It may come down as well, but if I wait for day's closure, I
maybe you can then define a way. Maybe then you can define a case where if the price goes 1% or 1.5% above your above a particular price or the swing high, like over here, right? Then you will buy and then you will not wait for the daily candle to close.
Right. Got it. And I think I should thank Bhaskarji also for clarifying that 50 MA pullback part. It was a confusion which clarified today.
Yeah. Okay. So yeah, there are different ways of identifying pullbacks. Moving averages we have already discussed. They provide dynamic support during pullbacks, always changing. And in a strong uptrend, stocks they bounce off these dynamic EMAs, dynamic rising EMAs, and many pullbacks will come to 10 EMA, 20 EMA, and 50 EMAs. Then we have trend lines. These connect the swing lows. And Mahiji, you have raised a hand.
Yeah, Punitji. Some stocks they rise quickly.
Sorry?
Can you hear me?
Yes, I can hear you.
Yeah. So some of the stocks they carry momentum. They rise from 50 EMA, say 30% from 50 EMA. Okay. And then they tend to come back to 50 EMA, just cross 50 EMA, and then again rise over 50 EMA. So if we already have a position in such stocks, there could be some exit criteria, like when it touches 10 EMA or 20 EMA breaks down, then we exit it. Or sometimes when we have a long-term view. So in such cases, should we add more position to such stocks when it rises from 50 EMA after coming down 20-30%? What is your thoughts on that?
No, when the stock is coming down 30% from the 50 EMA, I mean it is below 50 EMA and down by 30% from that level.
Yeah, no. First, when it was rising 50 EMA, let's suppose we have a position, okay? And it went 30% away from the 50 EMA.
Okay.
So you have, already some position in the stock. Now it is coming down on low volume and cuts the 50 EMA and rises again. So in such cases, would it make sense to add more into that particular stock?
I believe that if you are a positional trader and you know the company very well, right, and the market is giving you an opportunity to buy back those companies at rising 50 EMA, then it is an opportunity to buy, right? I believe that any stock that we know fundamentally, we understand the industry and the company, we know that it will, nothing fundamentally has changed for the company. We look for reasons to add. In most of the cases, you will get those opportunities at 20 EMA itself. right? But in some cases, it can definitely come down to 50 EMA. The stock will bounce up from 50 EMA, might come down from its high by 20-25%. But if you are a trader, I also believe that if the stock goes up 30% from 50 EMA or 40-50% from 50 EMA, there can be some. We know that there will always be an opportunity. In most cases there will be a probability that the stock will fall back. So booking gains also is important to put the money in the pocket.
From a positional perspective only, I was asking. Okay, what I have witnessed is many a times quality stocks, they rise well and then they undercut. I mean, they cut the 50 MA and again they rise. And when they cut with low volumes. So
Right.
should
That's
we
what
see that
Bhaskar
as an
explained.
opportunity to add is something which I was
Yes,
curious
that's
to
what Bhaskar
understand.
ji also explained, that undercutting 50 EMA is a strategy that is used by many, like Bhaskar ji also explained, and we will be coming to that slide also. And those are opportunities to add to fundamentally good stocks. So any pullback, I believe that to 50 EMA is should basically be just for the stocks which one can ride for a longer term, right? If you want to catch momentum, if you are swing trading, then pullbacks to 10 EMA in a high momentum stock and 20 EMA, they work well for swing traders. For positional traders, 50 EMA is something that they should be looking for to add to their existing positions or build new positions for medium to long term holding.
Thanks, Puneet. Thanks. Okay.
Yeah. Okay, so we were on trend lines. So yeah, so trend lines, these connect the swing lows, and we need a minimum of 3 touch points for a valid trend line to draw. We add on pullbacks on when the stock touches these trend lines and show some kind of a confirmation candle. I mean, it can be candlestick or any other pattern that you use. Breakout and retest. Retest can be to the breakout levels or moving average, 10 or 5 or 10 day moving average. Fibonacci retracements, stock goes up, we connect. I mean, I don't use it, so don't know much about it, but we connect the swing low and the swing high, and the stock comes back to certain mathematical calculations, and then these are some mathematically drive pullback levels from where the stock can bounce off. So few examples. This is a 20 EMA. The green line we all know is 50 EMA. This is Cochin Shipyard from June 23 to July 24, around an year period. We have strong uptrend as depicted by the green trend bars on both weekly and daily time frames. The stock comes back to 20 EMA here. Here it is 50 EMA, pull back to 50 EMA. The stock undercuts 50 EMA, goes up again, comes slightly closer to 50 EMA, respects 20 EMA. And over here, the orange arrows that you are seeing are all 20 EMAs. The momentum is so fast that it is not even going below 20 EMA. Another example, persistent systems. You can see the pullbacks to 50 and 20. Here, it makes a base. The trend goes, the weekly trend goes from green to yellow. The daily trend shifts from green, then yellow, then gets red over here. The 50 EMA turns red, starts to rise again. There's a crossback of EMAs, 20 and 50 EMA. And then again the pullbacks to 50 and 20 EMAs. We discussed these 3 charts last week. These are all momentum trades. These are also pullbacks. The stock goes up on high volume, goes up strongly, hot stocks. The stocks takes a breather at 10 EMAs, right? And then starts to rise again. So there can be different strategies for identifying and trading pullbacks. In Pro Setup's dashboard and the indicators, we can only identify and define pullback using the moving averages, right? So we do not have anything that we can define pullbacks to trend lines or breakout and retest and Fibonacci retracements. Yeah. So momentum trading is one trading strategy for trading pullbacks. Then we have pullbacks to 10, 20, and 50 EMAs. We can define pullbacks or trade pullback using 20 and 50 EMA undercuts. The EMA's compression with blue dots is also one of the trading strategy that one can use. When the blue cloud changes color from gray to blue, that can also be one of the strategy. A new rising 50 EMA and crossover of blue cloud over red. So these are certain strategies that we can use using the Pro Setups dashboard and the indicator. But yeah, before we discuss any trading strategy, it is important to understand the importance of trend also. Like Mitul Bhai said, when the small cap index or the Nifty 500 index, we use Nifty 500 in Pro Setups. So if that is in favor, if the market is conducive, then the pullbacks or any other strategy, it works better. So a strong trend should exist, and the trend should not be just for the stock, the trend should be for the market also. We first must confirm that the trend is bullish. The broader market environment, it influences heavily on the success of any strategy, including pullbacks. And for market trend, we have a separate page which tells us about the market breadth. A simple method that we have identified, that a 10 EMA should be riding over the rising, should be over 20 EMA, plus the 50 EMA should be green. We can say then that the market is conducive. For stock trend, we have weekly time frame and daily time frame. Ideally, the weekly time frame as well as the daily time frame should be green. The daily time frame can be yellow at times, like we saw in the one of the previous charts over here. But the green, if the daily time frames gets yellow or red, it will be kind of making a base in a longer uptrend. But ideally, both should be the green. Yeah. So these are the filters that we have on the dashboard to identify trend on weekly and daily time frame. We discussed momentum trading last week, so we will not discuss it again here. There's a strong momentum. The stock pullbacks to 10 EMA. It can pull back to 20 EMA also, and then rises again. Any questions here? Okay, we'll continue. So pullbacks to 10, 20, and 50 EMAs. EMAs serve as dynamic support levels, and it makes them ideal for pullback trading strategies. These are the three most effective EMAs for pullback trading, and each of them serve distinct purpose. They are suitable for different kind of trades. 10 EMA is most aggressive pullback approach in a hot and fast rising stock like we use for momentum trading. Best used for those kind of trades where the volume is sudden, when there is a sudden rush to acquire a stock. So pullback to 10 EMA in those cases offer good opportunities to buy. The pullbacks here will be shallow and quick. The entry frequency will be high, the risk will be high, there will be false signals also. Entry reliability because of the risk gets low, and it is ideal for traders looking for rapid entries and exits, and those who are more comfortable with high number of trades. The momentum will be very strong in this case. Pullback to 20 EMAs, they provide more cushion, a little more buffer than the 10 EMA. Best used for momentum and swing trades. It is kind of a sweet spot for pullback trading, and they offer optimum balance between aggressive 10 EMA and more reliable 50 EMA. So the entry frequency will be moderate, risk and entry reliability will also be medium, and it is ideal for swing traders who seek balance between speed and reliability of signals. Pullback to 50 EMAs is best used for long-term pullback strategies in fundamentally proven stocks. They provide more reliable support levels than 10 and 20 EMAs, smooth out the fluctuations, and they offer opportunities to add to current existing or new positions which have deeper corrections than 10 and 20 EMAs. Entry frequency will be low. We might even miss some opportunities if we wait for 50 EMA only. And they are ideal for longer term or position traders who prefer fewer but higher conviction trades. 10 and 20 EMA pullbacks occur much more frequently as stocks pull back to the short-term moving average, and many strong trends will never pull back to 50 EMA.
Hi Punitji, this is Karun.
Yeah, hi Karan.
Yeah. So sometimes in a trending sector and in a trending stock, the price doesn't really pull back much, but the EMAs catch up.
Yes.
So in that scenario as well, can we consider that as a pullback and go for an entry? And let's say, for example, now auto ancillary is kind of kind of a momentum sector, right? And there is Banco, so which kind of
Right.
gave a breakout, and it is kind
Yeah.
of time correcting.
Right.
So can we and one of the EMAs did catch up. So can
Right.
consider that as a pullback and take an entry there, or how do we really know? Though it is a fundamentally strong stock, it has moved a little up. How do we get that conviction there is still steam left in it, in the momentum? And
Yeah.
can
So those stocks that do not normally have a dip and they're just correcting at their highs, or there's time correction in it. 10 a fast moving average like 10 or 5-day moving average will definitely catch up, right? And
correct,
those, the technical definition of a pullback is that there is a temporary dip in the price, right? It looks for a price correction also. But fast momentum traders in a hot active stock like you mentioned, right? We can definitely look for those time correction and take them as pullback strategies, right? In the momentum trading that we discussed, one of the charts if I have placed, there was not much price correction over here, right? In the first one, GPIL, with every power. So there was not much of a price correction, but it was more of a time correction. But 10 EMA did catch up,
correct.
right? So you can consider them as a momentum strategy, and uh, it's a part of pullback because it ultimately 10 EMA catches up and trade accordingly.
Okay.
Puniji, a question for you.
Yes, sir.
The breakout candle that you had shown actually was a single candle, and then there was an immediate pullback after a period of consolidation, right?
This
The
one you're
first,
saying?
no, the first one that you had shown, which had a longer period of consolidation. It was a long time back. I think that was one of the first couple of slides that you had put up.
This one?
Yeah. So
Right.
basically, we are counting the uptrend based on the 50 EMA being green all the time, right?
Right.
Now, if we have a long period of consolidation, this 50 EMA line might keep changing its color from red to green quite on and off. So meaning that we have a longer period of consolidation. Now, in this case, it's very simple. The
Right.
period of consolidation still in an uptrend because the 50 EMA is still green. Now
Right.
we have a single candle which shows a breakout, and there is an immediate pullback from there. Now, there are many cases where consolidation phase is a bit longer, and there are multiple candles piling on the top of each other going up and up, right? And then there is a pullback. Now, it has run a lot from its EMAs anyway by the time, because there are many candles which have come up one after the other. Now, in those cases, should we still be looking at the EMAs, or we should probably ignore those cases because they have run up a lot, or we would see to the quantum of correction that has come up in this pullback thing?
Sir, in those cases, I will not chase that breakout. If the breakout, happens there and the stock never pulls back and it only keeps on giving us, strong blue candles, I will not be buying here if I miss this breakout.
Okay.
Right.
Okay.
Right. Right. A stock that has already broken around, and I mean, I don't know, I will not know where to keep my stop loss. If I'm buying only at this candle, if the candles are so strong, the breakout is so strong that there is no pullback, and I still decide to buy here, I will not be able to keep a ideal or optimum stop loss level or even identify it.
Right.
I would avoid it.
Right.
I mean,
And
there
in this case also, in hindsight, this chart looks an ideal one for an entry at that point, yeah, that you have marked, yeah. So it's all in hindsight.
So all
Now,
the charts that I will be sharing or looking at to to understand things, they all be very good and neat charts,
yeah.
right? But that's the way we can learn and understand. In real scenario, the charts will not be as clean, but still, when we know that we have to trade, not very frequently, and only when the market is conducive, we can still wait for, or let's say sit out when the charts are not looking clean.
Right. Okay, thank you. I think that answers all my questions. Thank you.
That's all. Yeah, okay. So I think we were here. No, we discussed this also. We were here. So this is the chart of Bharti Airtel. Like I said, the chart is looking very clean. And for pullbacks, we can, filter out charts which have red and yellow daily time frame, and only look where the trend is strong when we are considering pullbacks. So this is the chart when both the trend bars for Bharti Airtel were green. And if we were looking to identify pullbacks here, it gives multiple opportunities to buy at 20 EMA and 50 EMA during those pullbacks. The stock pulled back to 10 and 20 EMA and rising 10 EMA during the strong uptrend. Pullbacks to 10 and 20 EMA were frequent. It enabled short-term swing trading, like over here. And deeper pullbacks happened at higher levels to 50 EMA. There were certain undercuts also, like here, made an undercut here also. No undercut here, but it did come to 50 EMA. And so waiting for trades only on pullbacks to rising 50 EMA instead of considering them on 20 EMA meant that we had to pay a higher price. So we had to pay the price of being patient. Yeah. So trading pullbacks to 10, 20, and 50 EMA work better when both the weekly and daily time frame trend bars are green, and we can identify them using our dashboard. Green weekly time frame trend plus yellow daily time frame trend will most likely be making a cup formation or offering us a small base to trade. Like over here. Here the daily time frame trend is yellow, the weekly time frame trend is green. We can treat it like a pullback opportunity if the number of yellow trend bars on daily time frame are few in a larger uptrend. So the stock price is going up, right? For some time it did make a fall back from 50 EMA, giving us a yellow daily time frame trend, but the weekly trend, the higher time frame trend still remains green. If the number of yellow trend bars are many, like in this example, we do not treat them as a pullback setup, rather consider that as a breakout setup. Like over here also, the weekly time frame trend bar was green mostly, and there was yellow and red time frame 10 bars on daily time frame. So we consider them as breakout setups instead of pullback opportunities. Any questions here? Okay. So scanning pullbacks to 10, 20, and 50 EMA with Pro Setups dashboard. There are different filters. I actually made a small video.
Excuse me, Puneet.
Would you be sharing the deck
Will we share the PPT later?
Yes, I will share the PPT.
Okay.
Yeah, there was another question. Rajendra ji, you were saying something?
Yes, I was going to ask what can be stop loss strategy for these 20 EMI pullbacks. Like where do you put that? It's on the break, buying the candle low, or like previous when it touches and bounces back from the EMA, high up that candle, or like are your entry day candle? What are the different ways to actually work or decide a
Right.
stop
So
loss?
there can be different techniques to it. You can keep the current day candle on which you are buying as the stop loss, or if you are buying the next day after the stock, bounce from the 20 EMA, then a previous day candle can also be considered. In fact, a breach of that 20 EMA, if you are using 20 EMA pullback, the breach of that 20 EMA can also be considered at stop loss level.
Okay.
Right. So there can be different ways. If you are if you use a shorter time frame to decide your entries, if there was a tight range of 75 or 125 minute, the breach of that tight range, if you use that range to buy, that can also be a stop loss. So different ways. But anyway, in any of the cases, the stop loss percentage level will not be very high. So if you are buying near to 20 EMA and you bought that pullback on rising 20 EMA, the stop loss will not be more than 2 or 3% at max.
Okay.
Yeah. Okay, so there are different filters on ProSetup's dashboard. This is pullbacks to 10 EMA. I just made a short quick video. Rising 50. Okay, so we clicked on weekly and daily trend green. There is a ready-made filter for selecting both the time frame trend bars as green, or you can alternatively do that here also. So clicking on weekly trend and daily trend, you can choose whether you want green, yellow, or red. We will choose green. Then we selected rising 50 EMA. Yeah, to ensure momentum, we selected 3 here. The stock should be at least 3% away from 50 EMA. Selected 10 EMA greater than 20 EMA on rising 20 EMA. Then we, to make sure that the stock is very close to 10 EMA, we enter a percentage here. It should be between 0 to, let's say, 2%. 1% of 10 EMA. And because we are selecting pullbacks to 10 EMA, we are assuming that the momentum is strong and that is depicted by high volume also. So we select a minimum up down volume ratio of 2x. Yeah. So this was pullbacks to 10 EMA. Similarly, pullbacks to 20 EMA, we can select these filters, weekly and daily time frame trend bar as green. So for pullbacks on recently listed stock, this condition will not give any result because the trend bars there will be mostly yellow, right? So we consider a recent listing as a listing which happened in the last 1 year. Because of unavailability of the price for a longer period, the weekly time frame will not be green. So for them, we will have to look each of the charts or not choose this condition. We relax the condition of up-down volume ratio here. From 2x, we go down to, let's say, 1x or 1.2x. Instead of selecting distance from 10 EMA, we select distance from 20 EMA. Rest of the conditions remain same. Yeah. Let's show you. So weekly time frame temperature chosen is green. Rising 50 EMA. 3% away from 50 EMA. 10 EMA over 20. Yeah. And distance from 20 from 0% to 2%. Up down volume ratio of 1.2x. So this will give us the result where stocks are pulling back to 20 EMA in a strong uptrend. Pullbacks to 50 EMA also similar. We select weekly and daily time frame trend as green. We can relax the daily time frame trend as yellow also here, but in ideal situation it should be green. Yeah, so we can do it here also, selecting green on weekly time frame trend. Daily time frame trend we can select green. Rising 50 EMA. Here we will not select 10 EMA greater than 20 EMA on rising 20 EMA. To find the stock closer to 50 EMA, we enter a percentage here. Yeah, this gives us 28 names.
Puneet, explain me, should we also consider the good RS strength also for
yes
confirmation?
So
minimum, there are 4 type. Actually, I have joined just 2 days back your pro setup. So I'm new to this dashboard. So there are 2 types of RS strength, sector wise, L stock wise, and there are also again some
relative strength, weekly, monthly, quarterly, and so if we are trading for the momentum stock, so should we consider RS only for weekly or monthly stock relative strength, or should we change all the parameters?
We should not choose weekly here. If we consider a very high weekly RS here, it will not give us pullback opportunities. So we should ideally be selecting a high RS on 6 months or quarterly for finding pullback opportunities. So a high RS here, right? Maybe above 70 or 80, right? And even 65 will do in the current market situation. And then, finding stocks that are near to 50 or 10 or 20 EMA. So
Quarterly,
if we are selecting 50 EMA pullbacks, then of course we will have a higher time frame RS. If we are selecting momentum trades or pullback to 20 EMAs, then we can go for lower time frame RS also.
low time frame RS, that is weekly and monthly.
No, not weekly. I will say we don't
Only
go for weekly,
monthly
or
or quarterly. Yeah,
Yes.
if we are considering for pullbacks.
Pullbacks to low
Yes.
EMAs like 10 or 20 fast moving EMAs.
That's
Yeah, there are other conditions like TTM squeeze, Bollinger Band gap, tight ranges. These are all in addition to what we have selected here. This will give us stocks that are very close to their 50 EMAs or 20 EMAs or 10 EMAs. To add, I mean, we can add other conditions also like the tight range in the last 3 days or TTM squeeze happening in pullbacks to 20 or 50 EMAs or financial filters like these or a low volume zone. So these are all additional conditions that we can, which enhances our pullbacks. So these were standard pullbacks to 10, 20, and 50 EMAs. But there are other ways also to trade pullbacks to 20 and 50 EMAs. One of that we discussed also. It was 20 EMA and 50 EMA undercuts. Undercuts are like shakeouts. A shakeout occurs when the stock briefly dips below a key support level or consolidate in such a way that it triggers our stop loss, only for the price to quickly reverse and move back to that level and further higher again. So if we are, if we were following breach of 20 EMA as our exit to any stock, we might have exited here or waited for the stock to go below this level again. But if we had exited here, it would have tapped us and then goes up again. So this is the 20 EMA undercut. Similar to that is 50 EMA undercut, which cuts below 50 EMA and then goes up again. We have the filters for both in our dashboard. It was explained in one of the concept notes also. You can find those concept notes in the dashboard in the last page. And yeah, over here we have the undercuts and shakeouts filter. You can select 50 EMA and 20 EMA undercuts here. Just one click solution. And we also have
one question.
Yes.
So especially when these undercuts happen, usually there is some big player who tries to take out the small ones and then rise from there, right? So in your observation, if you have any thoughts like more than pullbacks, are these undercuts more successful in terms of giving better returns? Any thoughts on that?
See, I don't have any back-tested data to prove that, but yes, if you know our stock, like I said, if you know our stock fundamentally and you believe that it can just be an undercut. When I was writing this position in Yatharth Hospitals, there was an undercut of 50 EMA, right? I exited partial position there, right? But I had to buy the same position at a higher price. I was also shaken out that time, and but luckily I bought that undercut, and they wrote that position again, although buying at a higher price. So undercuts work, but they work well if you are I mean, I believe that every strategy works if you know what is the fundamental story or the underlying story behind a stock, right? If you connect those stories with technicals, right, they work much better, and that gives you more conviction also.
Yeah, and I would say thanks for that, Yatharth. I spotted it from the value sector in a given sector, which is the most valued stock, right? In
Yes.
the pro setup, I think that helped me make a good position there. So thanks for
Right.
those sectoral value-based, entries in the setup. Thank you.
You mean the peer comparison?
Yes, yes. I
Right.
was able to write Kim's and Yatharth to a good extent through that.
Right. Yeah, thank you for that feedback, yeah. Okay. So undercuts, we get undercuts in our alert sheet also. These are the real-time alerts, 20 EMA and 50 EMA undercuts. We get the same in our Telegram channel for alerts also. And you will not get these alerts when the undercuts are happening in the sideways chart, like over here. We will not get them, but we will get them only in the strong uptrending market. Not the market, sorry, stop uptrending stock. Then,
Excuse me, Puneet.
yes.
So after undercut, if a stock goes for consolidation for say 7 to 10 days or more, so what should be the ideal situation? So what should we wait for until what time again? If it goes after undercut, it's for consolidation.
So I believe it depends on the trading strategy. Whether you after the undercut you wait for the trading range to contract and then buy when the range contracts, or you follow certain pin bars or candlestick patterns to define your entries. So there can be reversal candles also which open below the low of certain days, right? But closes above on a high volume. That can a subsequent candle after uh, that particular reversal candle and undercuts 50 EMA, that can be a buying entry. I mean, you might not wait for a trading range to develop there, right?
And, I think one more way also be here to look at this, that if the market is in a movement, then that time there are so many stocks. So we can after 3 to 4 days we can also switch for or when, but the market is not even momentum. So it is rather good to wait for such uh, consolidation, let it consolidate and go for that.
Yeah, so market plays an important role, right? If the market is, behaving, is not behaving well, you can, wait for that consolidation range to bring. But if the market is doing well, that consolidation range might never come. So yeah, the market plays an important role whether on deciding whether you should be waiting for that trading range to develop or not.
So after this undercut, when it again comes back above that 50 EMA or 20 EMA line, so if the candle is good, strong candle and with a good volume, then we can enter.
Yes, so if the volume is high, maybe you can place your entry there. Or see, it all depends on the market conditions and your particular stock. There can be pullbacks, so there can be undercuts with high volume, right? So they might never form a trading range, or if the trading range is if the volume is not high, it might actually gives you the trading range that you are looking for. And again, depends how are you comfortable, whether you want to not wait for the trading range or you want trading range to form and then you identify your stop loss and then trade it. So ultimately it will depend on how you actually trade that undercut.
So, Puneet, if I may add,
Yes, sir.
right? Typically, when there is an undercut, look to the left. That's more important. Market is indisputably the most important. I would not discount any point in time, but generally look to the left and how the price has drifted towards the moving average, and then there is an undercut. Now, ideally speaking, if it's a reversal and not a pullback, it should have gone further below, breaking down the moving average, and it should have gone further below. And the very fact that there is an undercut shows a sign of presence of buyers coming in at that level, and they are trying to push the price above. Now, if you have studied Wyckoff's schematics, right, accumulation schematics and all that, in any consolidation, even if it's a shorter term consolidation, in any consolidation, these undercuts are typically done at the last moment before the stock begins its upside rally. So once an undercut is there, the chances are high for the stock to immediately start to move higher. And if you look at on the chart on the right side, right, undercuts only in an uptrending chart. If you look at the first undercut, right, the pullback to that moving average is much more linear. It's much more orderly movement, and there are not many big black bars, right, or the red bars. And then there is an undercut. So the next day, the opening itself is above the undercut bar, right? So as soon as the undercut bar's high is taken, it's a legitimate buy entry point, right? You can take some position over there, and then you mark the recent swing high as your pivot breakout point level and wait for that pivot point to be taken before you add further to the position, right? That's one way of looking at it. That's how I normally trade. Now, in contrast to it, if you look at the second undercut, right, the pullback to the moving average is fairly strong. The black bars are much more extended range, which means there is a lot of selling pressure. In those cases, I would not be in a hurry to buy immediately at the cross of the high of the undercut bar. I would rather wait for the pivot, the high to be reached, the pivot point to be reached, and maybe some consolidation around the pivot point so that I get the least risk that I can put in the trade for me to get into the trade. So you, as much as market is important and as much as the moving average where the undercut is happening is important, it's also equally important the context of what the price has done before it gets to this point level. I hope it makes sense.
Yes, thank you. Thank you, sir.
थैंक यू भास्कर जी। एक क्वेश्चन था, जो आप पिवट पॉइंट बोल रहे हो वो किस लेवल पे बोल रहे हो फॉर द राइट हैंड अंडरकट, सेकंड अंडरकट?
Sorry, was that a question to me? Can you say it in English? I don't follow Hindi.
Yes, Bhaskar. So thanks for the clarification. You talked about the pivot point, right? On the second undercut on the right hand side chart, where exactly would be your pivot point?
The swing high, the first black bar before the rally comes down, right? That swing high is the pivot point. So this second undercut, I would not be very comfortable entering because there is a strong selling. Look at the force with which the selling has happened, right? I wouldn't trust that undercut to sustain and to work. So I would rather wait for it to break the pivot point. And in fact, I would even wait for it to move higher and come back to the next EMA, 8 EMA or 10 EMA, and then I will look to enter. Because both the down movement and the up movement is rather very sharp. So your risk management will become very tricky in these cases.
Thanks, Bhaskar.
Welcome.
But Bhaskar ji, what if the market was not doing good and this selling was at was on lower volumes?
Sorry?
If the market was not doing good at this point of time and this selling was on lower volumes, would you not have considered this undercut also?
No, I would have, in that case, yeah, the market is not doing good, is still fine, right? I would have still taken a smaller position at the break of that.
Right.
See, contrast to the first pullback, right? The first thing, there, even if the market is not looking very good, I would have still entered because I don't know, right? Like, no, maybe this is a leading stock. The market is still going down and this stock may outperform the market, right? So I may still take a smaller position and see how it plays.
Right.
I would have done the same, Puneet. Means in the second right-hand chart where the second this undercut happened. So I would have done the same thing. And if you can see, there are gaps appearing
Too
as
much
well.
noise
So,
is coming, please. Someone.
hello.
Yeah.
Yeah. So I'm just saying this.
Puneet, I'm just interrupting.
1
I
second.
can listen all of you purely. Can you rest of that? Please mute yourself.
Yeah, I'm trying to do it at my end itself. How do I do it?
I think the noise is coming from
From whom?
His background.
I'm trying to find out who is unmute. One second.
I think noise is coming from Rajit's side only.
Acha, is it?
We cannot mute him in that case. If he is speaking.
Sorry, Rajat, please continue.
Yeah, so what I'll do is I'll just give me 10 seconds. I'll just change the settings.
Here
Can
I
you
see
hear me now?
no, there is still noise. Vinayji and Vinu, can you both mute yourself, please?
Can
I
you hear
think
me now?
Puniji, you can
I'm
mute.
trying to find out how to
Puniji,
mute
you
everyone.
can mute all participants, na?
Yeah, I'm
And
trying
then you
to do
can.
that. I'm not able to find where is that option.
In the participants list below at the bottom, you will.
Yeah, got it. Okay. Yeah, I've done that. Now, Rajiji, please. You have to unmute yourself. Yeah.
Yeah. So in the second undercut, which is on the right hand side image, so once this undercut happens, which is a red bar, but there were buyers out there, and they pushed the price upwards, and then there were 3 days of inside that big bar. I would have entered the moment stock opened on a higher note, which was near to about this 50-day EMA. I would have entered that. That would have given me a lot of confidence that there are buyers who are there, because if the price would have to go down, it would have ideally go down in these 3 candles. Obviously volume would have played a major role in that. Now since we do not have the volume over here, so I'm not analyzing volume, I'm not talking about volume, but the moment there appears to be a gap between the closing price of this fourth candle from undercut, third candle from undercut, and the opening candle where it just opens near the 50 EMA, I would have entered over here, and I would have entered partially, maybe 30%, 25%, or 33%, depending upon how I'm placed in other trades. So that would have been my trading point over here. And obviously the stop loss would have been very minimal, in terms of I could have taken either the undercut candle or the candle a day before candle. So that would have been my stop loss in this case.
Right. And all these pullbacks to especially to 50 AM, they work very well when we know the company, right? Like I was saying before also, if we know the company, if we are writing a story instead of just the charts, these undercuts give us good opportunities to get into those stories again.
So there was one trade which I took. I don't remember exactly how much time, but I remember the level. So it was in Tata Motors. So there was a trend line, horizontal trend line on a chart which appeared somewhere around 520, 530, and the price just ticked at it, and it just bounced back on that particular day, and I entered that day only. So what till means I only entered 25% of the position because the stock was still downway, but yes, it gave me good results. So it was not 50-day EMA, but it was a horizontal trend line, which we have seen somewhere in your charts as well, that in the earlier chart that you draw horizontal trend line to the, however you talked about the pivot points, but it was the earlier pivot points in that chart. Maybe if someone wants to refer, they can.
Okay. Right.
Hi, Parulji.
Yes.
Yeah, this is Nias. Punit.
Yes, Nias.
Just wanted to just to understand your shakeout logic that you are using. So a lot of shakeouts stocks. Are you looking at the 50 EMA rising up? Because most of that
Yes.
is coming under shakeout Google alert. They're all looks bit below than even 200 EMA. So what are the
We are
criteria that
not
you use
consider
for?
we are not referring, we are not considering 200 EMA at all. We are only
Yeah.
considering 50 EMA. We check whether the stock was rising up, whether the 50 EMA was green for a few days before the undercut happened. So here the 50 EMA is not rising, right? So any undercuts that happen here will not come to the alert sheets. But when the 50 EMA is rising, prior to the undercuts for at least few days, let's say 10 to 15 days, only then the undercuts will be coming to your alert sheet.
Okay, I'm basically I'm referring to the shakeouts. There is something called shakeout
Yeah, these
alerts as well,
shakeouts.
right?
Okay, these
Yeah.
shakeouts. No, these are separate. So they are not related to 20 EMA or 50 EMA undercuts. These will happen when either the stock falls below the 5-day swing low, but reverses and makes a bullish candle with a high DCR and above average volume.
So
Or
there you are not looking at the 50
no, there we
EMA
are not
rising
looking
up.
at 50 EMA or 20 EMA. So that was one condition.
Ah,
Second condition was when it breaks the swing low, and within next 7 days it closes above the high of the candle, which had a breakdown.
because most of the time I'm seeing it is below 50 EMA
Yeah,
stocks there. Yeah.
there we are not considering
Okay.
any EMA.
Okay. So it is just looking for a condition where
The
it
swing low is
just
broken. The swing low is breached and then it reverses.
reverses. And is it a swing breakout or no? It is just rising up.
No, so two conditions. One, like I said, it makes a new swing low in last 5 days, right? And
Yeah.
reverses, the candle reverses, closes at a higher DCR at upper range of the candle with above average volume. This is one. Second is it gives a swing, it breaks down from the previous swing low, and in the next 7 days, it closes above the high of the candle that gave that breakdown.
Okay. But how is it useful for it doesn't come under pullback or any other strategy? It's a
No, it does not
completely
come under
different story.
pullbacks. No. It does not come under any pullback strategy or no. You can just
Uh,
look at these shakeouts if you believe that in next few days if these shakeouts actually uh, have actually reversed or they were in fact the shakeouts itself, then you can look for base breakouts in these kind of shakeouts.
okay. Right. Sorry, it's another follow-up question on since you were talking about this rising 50 EMA. You also said no, there is a filter for daily and weekly trend. So
Right.
from the beginning, I'm not very clear how you calculate it. Say if you look at say a chart of Hero Motors, okay. So
Okay.
Hero Motors, it both weekly and daily became green until recently when the stock is already shot up around 30% from my buying guys. So how do we really make use of this trend bars? What is the real logic behind the trend bars?
Okay. So I will just share the chart of a Hero MotoCorp, right? I'm changing
Yeah.
the screen and sharing the trading view window. My trading view window is visible to you, right?
Yeah.
Right. So here the stock is falling here.
Yeah.
The trend becomes red. This is the weekly time frame trend. The daily time frame trend
Yes.
became here itself, right?
Yeah.
The calculation of trend bars is dependent on the red cloud, the higher moving averages, right? So this red color band that you are looking at, this is made up of multiple EMAs ranging from 30 to 60. And the width of this red band gives you the color of the trend, right? On daily time frame, like it becomes this much. This is the width of the red trend. It becomes green, right? We do not change the green color. We don't make it darker, but the trend here is stronger than here, right? If you see the weekly chart, it was red here, again dependent on this red cloud, which is again calculated on the basis of the weekly candles, right? It turned green over here. So this width of the red cloud tells us the color of the trend bar.
Mhm.
The
No,
hard.
what I'm asking is because is it not lagging behind in the sense if you wanted to go for a green, weekly green and daily green, if you look at Hero Motors in this case, it became both green only on the top.
Right, I agree. So at least
Yeah.
no. So the importance is that we are aware of the trend, right? The trend was definitely down. The weekly trend was green until here, right? But
Yeah.
the stock fell down badly. It fell by almost 43%, right? Starts to rise again, gave us some low cheat and cheat breakout. The importance lies in the knowledge of that trend. Not every trend, this trend has reversed, right? But not every trend will reverse at the time when we are looking at it. So that knowledge of the trend is important. Right.
Okay.
You might say that, we are late here if we consider only stocks that are both the green trend bars. Right.
Yeah,
If
yeah, yeah.
that is the
That was the
intention of,
question.
right, that was the question
Yeah.
that yes, we are late, but at least we now know that the trend is going up.
No, no, no. My question was when you are filtering it out stocks that has both green, then
Right.
basically you are filtering out all these particular opportunities that is rising up, and we are a bit late in the party.
No, yes, I understand that.
Yeah.
We know that, we have missed these breakout levels. We have missed this, low entry levels. But if you, like I said, if you know the company well, if you know the sector also well, and Hero Motocorp is not going anywhere, right? We can, in those cases, one can look for this. But if somebody is a momentum trader and he wants to ride only the momentum when the stock is going up, then he will look for pullbacks when the trend is strong, and the trend is strongly upwards when the trend bars are green. The daily time frame trend becomes green here itself, right? But it was, if you see, look at the weekly charts, it was still not green over here in during May, and it only changed from red to yellow and then subsequently became green in the month of September.
So probably this is most useful for a pullback for 10 EMA or 21 EMA probably.
So these 10 bars are useful for somebody who is buying at lower levels also, right? If the trend is red here, right, the momentum is down, right? It changed here when the stock actually went up again. There was a crossover of blue cloud over red cloud, and then trend changed from red to yellow, and there was some consolidation here. It came in the low cheat and cheat filters, gave a breakout here, and then now it is moving. We can say that it is an uptrend now.
Because in certain times, if you look at the same thing, I tried it on Maruti also in the similar way, but the trend bars are little different than this, what we are seeing here. Probably that you are saying is, Maruti was in consolidation for some time, not like a deep correction like Hero Moto. So that could be the reason the trend bars are different in this case.
So this is Maruti chart. The weekly time frame was green. I mean, it changed color probably because of the sideways movement.
Sideways movement, yeah.
Right. And so now both the 10 bars are green again, and the momentum is strong in the entire sector. So pullback opportunities to 20 EMA and 50 EMA will take some time to catch up, but yeah, pullback opportunities in the sector will be around 20 EMA now.
Yeah, no. What I was trying to say is, see, my question was basically on filtering out the trend bars, using trend bars. So the moment you do that, then you might be missing out good chunk of stocks that is basically rising up in the
So
market.
if a trader is looking to buy, at low when the stock is coming out of let's
The
say
consolidation
a good
or
consolidation and coming from stage 1 to stage 2, then he will
yes,
not look for both the 10 bars as green,
yes, yeah.
right? But if somebody who wants to trade only the stocks that are going up, the stocks that are in uptrend and want to ride the trend only, then he can choose both the 10 bars as green, or at least green on weekly time frame trend, because so that the higher time frame trend stays green, and ignore the daily time frame 10 when it is red. So weekly green plus daily green is one when the momentum is strong. Weekly green plus either yellow or green on daily time frame is when the momentum can be strong, but some relaxation is there when the trend bars are yellow on daily time frame.
So in this case, for example, Maruti, I took when it was like green. I mean, at the phase where weekly is green, but daily is yellow. So
Okay.
there you look for some opportunities to enter. So
Right.
that could be one way to look at it, right? I mean,
Yes.
yeah, but in Hiromoto, you didn't get that chance because that's different, probably because of it was a deep correction. Here, it was more of a sideways market for a long time.
Right.
So that's why your trend bars are behaving differently. I just wanted to
Yes.
understand the logic behind your trend bars and how we can interpret it.
Right. Yeah. I hope I'm
Okay.
clear how the trend
Yeah,
bars are
yeah,
calculated.
yeah. Great. So it is basically about that cloud thing. So your basic calculations on the cloud bars, sorry, the
Yes.
cloud
The
thickness.
width of the
So
cloud. Yes.
yeah, so if it is a longer term trend, it will be thicker on the red band, and if it is the daily, you're looking for the blue cloud. So if it
No,
more thicker.
for daily also we are looking at the red clouds. We are not, the trend bars are not calculated based on the blue cloud. The trend bars are only calculated based on the red cloud, both on daily and weekly. For daily, we look at the daily charts, daily chart clouds. For
Okay,
weekly,
yeah.
we are looking at the weekly clouds. When we are
Okay.
when we are looking at the daily time frame, the weekly trend bars are calculated based on the weekly candles.
Okay. Understood. Thank you, Panit. Yeah.
Yeah, Puneetji, just a follow-up question to Nya's question. So
Yeah.
if we load Kilometer, so then now it is turning both green after a very long time.
Right.
So is it a good opportunity for positional trading from here?
Yes.
Okay. Right. So that's the one thing. And also, since you are in a trading view, I take the liberty of just asking you because time and again you are talking about the entries and all, looking at the day chart or a weekly chart, then coming down to the 75 minutes or 125 minutes and looking for some type of a swing high breakout or something, then you are saying that you are entering at that point of time. Can you
Right.
just give me a live example out of whatever the stocks you have done recently, or any stocks, just to see that from a daily time frame, even in a pullback case or momentum case, whatever you have done, how you are going down one step to a 75 minute or 125 minute and doing a entry, just to understand, because generally
This chart is open. Let's look at Hero MotoCorp chart only.
Sure.
Right.
Thank you.
Right. We identify the trend bars as green, right? And the stock was very close to 10 and 20 EMAs. Let's say that.
Yes. So this is very
Let's say
close.
that
Yes.
let's say that this day has not happened. We know we have found a stock which is very close to the swing high. In fact, the candle is so tight here that any breakup above this candle is a buy point. Let's
Yes.
we go
Buy
to a
out.
75-minute chart. To me, this is the place where the stock is facing resistance.
Yeah.
Right. I will draw this trend line, put an alert. Now alert cannot be put, but put an alert here, and then wait for the candle to go above this. My initial stop loss, if the candle breaks out and then fails, can be placed here. Right. Partial stop loss I can place here, and the remaining stop loss based on the daily candles.
Okay.
So the stock opens here, it falls down. I don't know whether I would have got out of this or not, depending at what time this is ending, but this is a 75-minute chart. Not a good candle to start with, honestly. But yeah, so this is the candle, right? So partially, if I had taken an entry here or if I had put the GTD order, I might have got exited also partially, but remaining, I would have either added or made a new position here.
Okay.
Right. But that's how I decide the range, right? The range that I have to trade so that my stop loss is also low. And for a tight range like this, Yeah, it was actually a low of this candle also only.
Right. Okay, thank you. Got it.
One more, I think. Sorry. So here, just sharing one more because you asked.
Sure, sir.
So it was in the watch list here. Right. I had drawn this to, I think it was, we made it during our last week's presentation. So I wanted to make a swing high like this. I go back to 75 minute or 125 minutes candle. This is what I was looking for. I did not trade this, just showing as an example.
Sure.
Right. Entry would have been above this over here because it made a breach of the this particular level that I was looking for. Right. Same I have drawn for high tech also. It is in my watch list. I was looking for this, but it was not making any higher low. Now it has made, I'll be looking to probably buy around this level. You know, or maybe at this, partial position over here and then over here. And my stop loss will be, sorry.
Previous swing low, yeah.
Yeah. So there are different ways of doing this, like I said, I know somebody, a good friend of mine, he's using simple crossover of 9/21 EMA, at lower levels, or sorry, at lower time frame. I was looking at, I have seen Ravi Bhai's Stocks Nerd sessions also. He uses anchored VWAP from this level. So he will look to, break this level. This is anchored VWAP. He will look to, he'll be looking at a breakout of this level to decide his entry. So it depends on person to person, how you want to keep, how you want to enter these stocks.
Got it. Thanks, Puneet. Thank you so much.
Hello, Puneet.
Puneetji, we use, sorry, go on.
Hello, can you hear me?
Yeah, Dikshit.
I think that you can open the fourth motors, Puneet.
Force motors.
Yeah, daily chart with the trend bars. I mean, somebody was asking about the trend bars, both weekly and daily becoming green, and no, it is already late or we missed opportunities. Right? Like this is a recent one where in March, April turnaround, and even if you enter at May 6th or April 30th, May 2nd, if you can go back there.
May. Over here?
Yes.
Okay.
Even then, both the trend bars are green.
Right.
So in a mega trend, even if the entries are late, but the the trend is so good, it can last for longer time. So this when both weekly and daily are in trending, that's how we see as green. So the entries might seem like late when we are looking, something like a Hero Motor or something, which we see like we have missed few opportunities. But if trend is sustaining, then it's still a good entry point from my point of view. So, and then you can look for pullback trades at 20 EMA.
Right. So pullbacks are designed for taking those missed opportunities.
Yes, correct. Because you for some reason it might not be in your radar, but then it comes into your radar. You're seeing it has moved up 20-30% in a month, and then if it's giving a pullback with low volumes, so then it's like a perfect opportunity to with low stop loss, lesser risk, and then better reward.
Yeah, yes, Dikshit. Yeah, thank you. Yes, Varunji.
Yes, so on this force motors chart, right, so I also wrote this, but my only question is where to book the profits. Now, if you're sitting at a good profit position, then you see your stock going to 22K and then coming back to 16. Sometimes you would not want to book your profit. So what is the best way to book a profit in this stock particularly? This just as an example.
Dikshit, would you like to answer this?
Yes, Puneet. It depends on, I decide on two factors. One is my positional size and how aggressive I'm trading, and also depends on my portfolio gains. When I enter into a trade where I had did not have much of cushion with my portfolio levels, then just my psychological point of view, I just want to book some gains. Once it gives me you know uh, 3 or 4 or that kind of uh, returns. But when I am in very good already in profits, and I have portfolio gains, then I would tend to give it little more time. If this year, if you see, uh, every time it is coming and it is not breaking down 20, then I would try to hold it at least some part of it, like 20%, 30%. And then if you see the biggest trend that was on July, it moved highest, and then it saw some selling pressure here. Then I will try to to be very active from here on. I don't want to give too much of uh, time for it to pull back and consolidate and things like that. I would be aggressive in booking my gains here. I would probably book completely, even if it breaks or that 17,500 levels. I wouldn't have hold for this 17 to 21,000. If I had entered anywhere from May 1st levels, I mean 9,200, 9,500 levels. That would be my strategy normally. If I'm trading at very lower time frame and very aggressive, I mean my position size are big, then mostly I would be booking and then try to enter if it's there a pullback. So that's my way.
If I may add, sorry for butting in, but if I may add, this is a trade that I held, and this I held it in my investment account, not in my trading account, primarily because this was a fresh stage two breakout from a Stan Weinstein stage analysis perspective, right? So it was giving a fresh stage two breakout. So I entered, if I'm right, somewhere around April May time frame, around 9,600 700 price levels, right? So when I enter, so the reason why I'm giving that clarification is your exit strategy should be different for your investment account versus your swing trading account.
True.
Right? So you can't have the same rule fitting in for both the cases. You will have to have a different rules for it. So this is an investment account for me. So my exit rules were all based on that investment account perspective, right? So what I was doing is while the stock was moving higher, I was always monitoring it with the 10 EMA on the weekly basis, which is the 50 DMA on the daily, right? Like, so I was tracking it against the 10 DMA, 10 simple moving average on the weekly basis, right? Just to keep it simple. And it was constantly moving higher, and I did not have any reason to panic or do anything in it because typically when a stock is in a strong uptrend, right, like no, the lesser I intervene in it, the better it is in terms of letting the compounding happen smoothly. So in this case, I did not intervene. I just allowed the stock to rally on. Now, the first moment when it gave me a panic attack was when it had a long upside week, and then there was a lower closure, and then following that day, it had a strong red bar, and then it quickly went down and started testing some of the moving averages that it has not violated in the recent past, right? The 21 EMA was not violated until then, but in one moment, exactly, that's the point, right? Where it went back and hit that level. So when that happened, I kind of like got into a sense that this is now getting into the buying climax. Now I need to be a little bit more careful about it. So I started monitoring this stock on the daily time frame from then onwards. And it bounced off from there, and then it made a new higher high, right? It again had a one strong green bar, but then following that day it had a strong reversal bar. If you have studied Jesse Livermore's book, right, this is one of the red signal that he calls for. So a strong green bar following the next day, I think he called something like a reversal bar or some such name. I forgot because I read it a long while ago. But this is a red signal, right? It turns back. So now that swing high becomes my sacrosanct level that I'm going to watch out for. So the stock comes lower and then it tries to make, but the next swing high is a lower high. It's not making a higher high, right? So now the previous swing low becomes sacrosanct line. That's the line of least resistance, so to say, what Jesse Livermore talks about it. So when that previous swing low, like 3 bars below that, prior to that, right? When that swing low is taken, right? I don't want to speculate anymore. I want to exit it because it has made a low, it could not make a new higher high. It's making a lower high and now it's breaking below the lower low. So I exit, and usually I'm very lazy. I don't exit in parts and all that unless I'm selling into the strength. And more in a swing trading perspective, I generally look to exit once for all. I will exit once for all and then I will sit back and let it form the base, right? Let it form the base and then I will worry about when I can enter the next. Because if you look at the previous base that it formed, right? That base is quite a long one. I think it was almost about a year or so. Why would we want to wait in a stock which is consolidating for that long a duration, right? Let it form the base. Let it take all the time it wants to form the base. When it comes to the stage 2 breakout, that is when we should get in.
Thanks, Bhaskar. So I think for me, the entry was at a good point in this talk, but I faltered at the exit. So I'll keep that in mind. Thanks.
Welcome.
Follow-up question to Bhaskar ji. So now if you have to enter, you keep this in the morning, your watch list or something. So you will look for a higher high and then enter this stock?
No, I will want it to form a base. I won't enter even if it forms a new high right now because the chances of that new high holding on is very low. It has already run up quite a bit, right? Exactly, right? Let it form a base. It has run up a bit. Now it needs time to consolidate because even if it comes back almost immediately now to the new high, again, if you have read Richard Wyckoff, right? He has this law of cause versus effect, right? You need a cause. The base has to be longer. The longer the base, farther the rally to the upside is. If the base is going to be shorter, the further rally is not going to be likely to be longer. So it will probably falter. It will break above this new current swing high, all-time high. And probably it will roll over and come back into the base and it will go on forever like that. So I wouldn't be in a hurry to enter at this stage. Let it form a base. It's okay if I miss another 20-30% in it. I already made a decent profit on it. I will just like to sit back and let it form a base. We will go and find out other stocks which are coming up in a new stage 2 breakout and enter there. It's not, there is no compulsion that the money has to be made only in force motors, right? We made the money in this stock. The journey is over. Goodbye. Get on and move on and find the next stock.
Congratulations for this trade, sir.
Thank you, sir.
Congratulations all who actually wrote this.
Thank you so much.
I just thought, do we have a provision where we spot new stage 2 entries, anything like that on Prototype?
We have not made it, saying that these are the new entrants, but can be made based on the basis on these color trend bars. So if a 10 bar is shifting from yellow to green, we can have an alert, something like that. Or we can make a filter wherein a stock is very close to multi-year high breakouts. So those kind of filters can be made. We have not made them yet.
Now, if with given whatever we have on the dashboard today, if we have to spot something like that, what would be the ways through which we can filter?
So one is the crossover of the blue cloud over red, when this kind of a crossover happens, that is one. But that is the only one, honestly. Right.
Okay.
So when, if the weekly trend is red, right, the stock is in downtrend, and then the crossover happens, you can say that the stock might be coming out of its stage one base. Right. So that is one way. But other than that, we don't have anything else right now.
I think that would be interesting if we have something like that. But yeah, I think understood what you said.
Yeah.
Yeah, but I think your low cheat and cheat breakout comes closer to that. Obviously, you need to look at the context at that
Right, that
particular
is
time. Yeah.
yes.
So your low cheat and cheat breakouts can come closer to that if you apply other factors, and then probably
No,
look
even
at
the
the chart
swing
and
breakout, even the pivot breakout alert, that is good enough, right?
yes.
That does the same job.
I think similar example is if you see NetWave, so it almost base of 7 to 8
Correct.
months, and then it
Correct.
has given move. You can see 7 to 8 months
Correct.
of
Correct.
consolidation, and then it has given a move. So
It
here
it sorry, it
This
gave a
one.
breakout. It had a very orderly pullback to the 10 EMA, and then it bounced off from there.
Right.
Yes, sir. Yes, sir. So here I actually booked around 3,100, 50% of my position, and then I am riding still 50% of my position still here in NetWave.
Great.
So like just to like to minimize the risk, although it rode up to so I generally whenever position is there and I gain a 50-60%, so I book generally 50-60%, and then rest of the position I ride till the time like trailing EMA.
Right. So you're trailing the momentum with 10 EMA?
Yes.
Okay. Fine.
See, so sorry to add one more point, right? For stocks that you are riding for a while, right? One simple thumb rule that you can follow in terms of the violation of the moving average is what is given in the one of the books. I think it's William O'Neill's disciples book, Gil Morell's book, right? If a particular moving average is respected for greater than 7 weeks, and then if the stock violates that moving average, it means that particular level of momentum is weakening, right? That can also be a good indicator to take off some profits in terms of if a stock is respecting 21 EMA or 20 EMA that you're following for greater than 7 weeks, and now it's suddenly breaking below that level, probably take off some money, if not all of the money, is one of the strategy that you could look at.
Okay. Okay. Yeah. Thank you for the insight, Bhaskarji.
Most welcome, sir.
Yeah, Puneet, I just want to say something.
Please, Manishi.
Yeah, actually, for Fibonacci, I think maybe Bhaskar can help us out. He's, I will say, having expertise in how to take trades in using Fibonacci during pullback or retracement. So if he can, I think in one of his session he has explained, but maybe if he can, again share his expertise, that will help.
Okay, Bhaskarji, do you follow Fibonacci?
Yes, I do.
Okay. Do they work? I mean,
Oh,
are they working well for you?
Wonderfully.
Okay. I don't have any knowledge, so maybe we can learn from you someday.
Sure, sir. It'll be my pleasure. I'm not that good a person in terms of the presentation as you have done. So if you can live with that, I can explain.
No, sir, you are explaining things to us with much more clarity than I can even do. So thank you, really, thank you for that. And
pleasure.
but yeah, we would love to learn from you, sir. Any
Puneet,
concepts?
just a suggestion. So you can organize, like how you have organized multiple session from different experts from group. So similarly, you can organize one session from Bhaskar ji also, so that we can learn from him also,
Yes.
because I have seen the great insights from him, and it's a
Yes.
good learning from me personally. So you can
True.
organize one session so we can learn from him.
Sure.
Yeah, I second that as well. Please
Yeah,
do
we all
that.
want that. Yeah.
I
Very well.
agree. I agree, Puneet bhai. Just said with what Badal bhai said. Just make a session with Bhaskar sir. So let's learn from him also. Okay. So also whatever explain about the exit strategy, he explained in a single way, but these are 3 to 4 types of beautiful exit strategy. Normally we are following it, and let's fix a session with him.
Sure, Ashish bhai. Okay, so next we have new rising 50 MA, again similar to undercuts. We have a dedicated filter for this. It gives us stocks that changed its 50 EMA's color from red to green in the last 2 days. Yeah, this is a similar chart, the same chart that we had in the previous slide. Crossover of blue cloud over red. We explained in the chart. We have blue cloud and the red cloud. When the blue cloud crosses red cloud from below, we get an alert in our, sorry, we get those names in our dashboard. There's a separate filter for that, and you can use the same for either catching slightly deeper pullbacks in a larger uptrend, or if you want, even if you want to look for stocks that have not yet reached their low cheat pivot levels but want to have an early entry, you can use them for stocks that are in downtrend and then the crossovers are happening. Yep. So we have a filter for that. There can be multiple whipsaws along the way, and then there can be nasty unexpected moves also with the crossovers. In this case, it made a momentum setup here. But yeah, after the crossover, it did not just stop. So ideally, if you're looking at a crossover kind of a setup, ideally it's best when it crosses over and then falls back to 50 or 20 EMA and then starts to move again. This is crossovers was one of the least followed strategies, though we have it. But one of the easier strategy that one can follow is simply when looking at the blue cloud. When the blue cloud is in stress, it turns gray. And when it comes out of the stress, it turns from gray to blue again. Now, not many follow it, but if I have a call with any new user, somebody who is new to technical analysis or new to trading, I suggest them to look at the charts and notice the change of colors from gray to blue. This is a very easy to follow strategy. Uh, it's very simple. Notice at the blue cloud, notice at your charts, if you have trading view in front of you, the cloud changes from gray to blue and blue to gray multiple times. If someone just simply follows the change of color from gray to blue and look for a tighter range below that, he can still trade using this simple strategy. I'm not sure whether any of you notice this or use it, but it is one of the very simplest strategy which I suggest you can look at. Then compression and expansion of the blue cloud. When the blue cloud compresses, it gives us blue dots at the bottom of the chart, somewhere like this. We look for a tighter range and place an entry above the break of the tight range. These two blue rectangle lines also are drawn automatically when if we enable it from the settings in our indicator. And this is also one strategy which can be used in pullbacks. We have an uptrend, the blue cloud compresses. It will also be turning from gray to blue here. But if you are following only the blue dots, I've not referred it here, but you can combine them. Yeah. So I explained in a concept note also, which was shared earlier. We have filters for this. The same thing can be followed on weekly charts as well as daily charts. We have a ready-made combination also, which gives us stocks with this compression, stocks in with stocks in uptrend, and making a tight range. Yeah, so these were the pullback setups. There are other filters that can be added to pullbacks, like low volume zone, inside bars, flags, RSI, sector and stock relative strength, volatility filters, certain financial filters. These add to those pullback setups. The first step was to define and understand what are pullbacks. Next is how you can use different filters over them. Yeah, so that's from my side. We have had questions and answers. If you have more questions please let me know. We have Bhaskar ji, Dikshit, and many others, Ashish Bhai, who can answer your questions.
Hello, Puneet. Very good, excellent session. At the volume side, can you explain once again what filters and how much the degree should be for pull out we can use?
So I have not actually taken out charts or identified charts which I can explain, but generally the volume on pullbacks will be lower than when it was rising, right? And I'm assuming, and I'm only answering this for a market which is not volatile, right? In a highly volatile market, the pullbacks will also be volatile. There can be high volume activity also. Like in the last 1 year, we have had that kind of a sideways market, downward falling market followed by sideways market now. So other than that, when the market is in uptrend, the stock is also in uptrend. The pullbacks will always be on lower volumes.
And can mini coil can be used for that, and the blue dots, but what is that
Volume has nothing to do with mini coil and blue dots. Blue dots is the compression of the blue cloud. Mini coil is when your last 2-3 bars are inside a mother bar, and you look for the breakout of that mini coil, the small mini coil. Mini coil and inside bar, they tell you that there is a tightness or reduced volatility in that particular stock for the last 2-3 days, and then you look to use that low volatility period to identify and um, trade when the stock breaks that volatility and goes upwards.
Yeah. So that's why I'm saying that when there is mini coil and the fluctuation is also coming down and the volume
is also low. Okay.
Volume also low. So that's same. The blue dot also tell about that the compressing means the moving average coming down, but with a slightly lesser fluctuation. So
Yes.
it also helped to for the confirmation of that pullback, that this pullback may be more probable to be succeed for that.
Right. So filters like mini coil, inside bars, TTM squeeze, they're all tells you that there's some kind of a compression or tight squeeze happening. So you can add them to the setups to improve their effectiveness.
All right. And when I'm using this, as I also asked for the help desk, that some pro setup dashboard is not fitting to the desktop screen properly, or something resetting the issue. Is there
So
some?
you were looking at the dashboard directly on the Pro Setups website. So
Yes.
instead of looking at the website, you can directly open it from on the Looker Studio. So use it on the Looker Studio. There you will be able to save the filters as URL. You can book them. You can bookmark the URLs.
Where from can I use it?
I will share the video that we made on how to save the bookmarks. But if you there's a link also in one of the pinned messages in the group, right? You can open the dashboard directly from that link. It will open in the Looker Studio instead of going to the website, and then everything will fall in place. I mean, the right hand side screen that you are not able to see on Pro Setups website, you'll be able to see here. Then you can choose filters, just click on URL, drag it to the bookmarks page, and then you will be able to mark the bookmarks, save the bookmarks as your filters.
Okay, so have you shared the link here now?
The link is in the one of the pinned messages of the group.
Pinned messages.
I shared it also. I think I replied it also to you in the group.
We'll look for that. Okay.
Yeah. Yes, Sagar, you have raised the hand. Sagar, you can ask your question. Okay.
Hello.
Yes, Sagar.
Just had a query that can we add this RS filter on the trading view chart?
On the trading view chart, no, we cannot enter any information which is not calculated within trading view.
Okay.
Yeah.
Okay, so that is not possible. No?
So that is not possible currently because TradingView has stopped new indicators to be built which can take and print external data. Once they allow it again, we will we want to actually put RS and circuit filters and other things right in the TradingView chart. So those who are since a long time, they are allowed to continue, but new indicators cannot be made.
Okay. Okay.
Yeah.
Yeah. Thank you.
Okay. Any other questions, please? A small poll on the feedback of this session so that I can improve. If you can fill this quick poll. Can you see the poll on your screen? Okay.
Yes, Puneet. We are doing it.
Okay. Thank you, sir. I was thinking of having a session on charts, so that a session in such a way that you ask how to scan for a particular stock. It will not be a presentation from my side, but just a kind of a question and answer session where you ask for how to scan for a particular kind of charts or where you want to find entries, something like that.
Yeah, ask me anything.
Yeah, kind of that. Ask me anything, but wanted to specifically focus on how to use the dashboard so that you can show me the past charts and tell me and ask me how to identify those kind of setups using the dashboard kind of thing.
That will be great. Right.
Yes, that is
So
the question number
We
2.
need a well in advance notification so that we can make a list of such charts.
Yes.
Maybe this is a struggle. I scan 400 charts and out of which 20 become successful. Now I want to make a process out of it.
Right. Yeah. The idea is that only, to share those charts and to tell you how you can use different filters, a combination of those filters, and then put them save them, and then how do you use them?
Great.
Yeah.
Okay, one more. Sometime later, if you can help, how to this dashboard comes sometimes looks very clingy when we paste it on the.
Sorry, it looks very
so clumsy. It
clumsy.
covers most of the trading view chart screen. So, is there any way out to make it some better smooth?
So you are asking for decluttering the chart, right?
Yes, when I apply the setup on the charts, then especially if there are especially RS like line, it sometimes hides when under the volume or something. Yeah. Or am I missing something? I think
I will do one thing. I will make a video on how to declutter the chart. Although I have a small one-page note for that, I shared that in the group. But
I think video will do better because as many times when we do it after seeing.
Okay.
That
We'll
will
make
be
a quick video. I will make a quick video for that.
Yes, sir. Thank you.
Okay. Right. Yep. Yes, Sagar.
Yeah, Puniji, just a suggestion. So
Yeah.
can we just add a separate channel for you so that we cannot miss your messages. Like only your message will be part of that channel only, because most of the message we missed your message. Like I missed
I
your
think
recording message, but
do one
thanks to
thing, Puneet
Badal.
bhai. Yes, yes, agree. Puneet bhai, just open one another topic. It's only for some whatever name you want to do. There you post. Okay, simple.
No, but what will I post in that? I mean, something which will not be in the discussion group, but only in that.
Maybe they want to see your trades because many people last week also told
I
me.
do not want to. I want to be very clear. I do not want to share my trades because.
No, Puneet bhai, listen. It's not about trades. It's about suppose a Tata investment, right? So here we discuss about how the exit criteria have been perfectly discussed about Bhaskar sir, right? So
Okay.
here the perfect example. Yesterday only it got the same criteria what Bhaskar ji explained with us. One of the exit criteria, right? So we can discuss those things in that particular topics. What? Hope you got my thing, right?
No, no, no.
Sometime the
Her suggestion is totally different. This is the message from the pro setup because there are, say, 30, 40 messages floating around the same group every day. The messages that you are posting gets missed out. That's what she was trying to tell. So if you say that the message from Puneet, just I'm giving a name, a message from Puneet, in that group only you will post something which is very relevant, saying that, okay, next week we have this particular webinar
I
or
will do
Zoom
one
meeting.
thing, something like this. I will put a hashtag, and then using that hashtag, you can just click on that hashtag, and all those messages will appear.
Yeah, or you can pin that. You can pin that in that
Right.
particular chat so that the pinned messages people will be able to see that. So you pin it and say that alert all the users in the group. So everybody gets an alert in their Telegram saying that, okay, something Punit had done it. So we take that as a referral point. Otherwise, I agree with her. Things get lost with so many people in so many other groups, thousands of messages coming, pouring in.
Got it. Sure. Fine. Thank you.
Thank you
All
all.
right.
I don't have anything else. If we are okay, I can leave the call.
Yes. I think we can end the call here. Thank you so much, everyone, for joining. And we will continue to have more calls. We might not have a call next weekend. I mean, some Diwali celebrations
No,
are.
that's fine. That's fine. Puneetji, we need not have a call every week also because it gives time for the people to even practice what is being discussed in this call. Maybe a week or two, and then we can reassemble to study the new topics. Yeah, fully agree.
All right, then. Thank you, guys, for joining. Thank you for giving me your time. And any doubt that you might have, please do ask in the group, and I will be happy to answer them. Thank you so much.
Thanks, Puneet. Thanks.
Yeah. Bye-bye.
Bye.
Thanks, Puneet.
Thank you.
Thanks to everyone.